Welcome everyone. This is Brian from CPA Review on Core and Common Final Examination. Today we are going to cover Audit Planning Memo, Materiality section. Auditors must determine material misstatements in the financial statements. It is important to know how material percentages are being developed. Materiality. The concept of materiality recognizes transactions, amounts, or certain types of errors influence the relevance and reliability of information for decision making. Users of financial statement include banks, other lenders, regulators, other businesses, shareholders, and investors, and other stakeholders. All audit planning has to determine its users of the financial statements. Materiality in stages of audit. There are 3 stages of materiality in audit. Planning stage, materiality is used to determine which balances and transactions the auditor will focus procedures on. Execution stage, materiality is used to evaluate errors discovered and determine the extent of any additional audit procedures are required. Reporting stage, materiality is used to evaluate the aggregate of the uncorrected errors that have been identified throughout the audit. High or low materiality. So what does it mean when the materiality is high or low? Low materiality means that auditor will perform work over balances that are unlikely to lead to finding a material misstatement, and the audit will be inefficient. High materiality means that auditor may not examine financial statement elements that are significant to the entity, and they will be performing fewer procedures. Steps to materiality. There are 6 steps to calculate materiality. Step 1. Identify users of the financial statements. The auditor to identify significant users of financial statements. Common users are lenders, shareholders, potential investors, or management. Step 2. Identify users' objectives. The auditor must gain an understanding of the objectives and sensitivities of all significant users of the financial statement. For example, financial leverage, cash flow generation, asset values. Step 3. Determine the benchmark for materiality. The auditor should consider primary goal setting benchmark. Common benchmarks are normalized profit before tax, total assets, total revenues, total equity. For profit entities, they are most likely to be concerned about profitability. Normalized profit before tax should be chosen. Step 4. Identify the percentage threshold for materiality. The auditor must consider user objectives when determining percentage. 3 to 7% for normalized profit before tax, 1% to 3% of revenues and expenses. For non-profit entity, allow only between 1% to 3%. Step 5. Calculate overall materiality. The auditor to set any unusual or non-recurring items that may need to be normalized. Step 6. Calculate performance materiality. The auditor considers the amount of audit work required to ensure that the identified and potential unidentified misstatements will not exceed overall materiality. Performance materiality is 60% to 70% of overall materiality. Cruise Ship Travel Inc. is trying to acquire potential investors and therefore getting financial statements audited. The auditor has determined that users be the potential investors. Potential investors will be concerned about going concern of company, financial leverage, cash flow generation. At most, investors are concerned about whether Cruise Ship Travel Inc. is financially stable to invest their funds on. Therefore, auditors have chosen normalized net income before tax as threshold for materiality. The auditor has chosen a benchmark of 7% due to Cruise Ship Travel Inc. has excellent internal controls and no issues were found in prior audit. The Cruise Ship Travel's normalized net income before tax is $500,000. Overall materiality is $35,000. This is taking 7% benchmark times by $500,000. Auditors should then consider performance materiality. It is done to increase the scope and extent of audit procedures and to ensure that the aggregate of uncorrected and undetected misstatements does not exceed the overall materiality. Cruise Ship Travel has chosen 70% for performance materiality. Performance materiality is calculated as $35,000 times 70%, which is $24,500. As a result, if the cumulative total of misstatements exceeds this value, it will be considered a material misstatement and the auditor will need to assess further. Materiality threshold percentage. The percentages is determined by auditors and it's basically considering user sensitivity. Auditors will be looking at things such as risk of misstatement, nature of financial statement, size and complexity of entity, any external changes. For overall materiality, choose low percentage, 3%, if high risk of material misstatement. Choose higher percentage, which is 5% to 7%, if low risk of material misstatement. For performance materiality, choose low percentage, 60%, if high risk of material misstatement. Choose higher percentage, 70% to 75%, if low risk of material misstatement. Materiality example: North Central Rail Line NCRL is a railway company in Canada of transportation and communication of goods and people across the nation. North Central is a private company and has been growing in recent years. However, senior management has found out that there has been employee theft, misappropriation, or misuse, and it is necessary to conduct an audit on total asset. North Central's capital is comprised of funding from private investors and a long-term loan with the bank for $1.5 million. North Central's total asset has a value of $3 million. Identify the users of NCRL's financial statements and identify their objectives. The users are investors. Investors of North Central are concerned about integrity of entity. They will be concerned about the problem and reevaluate decision to invest in the company. The bank will be concerned about whether North Central's ability to meet loan payments as they come due. Shareholders are concerned about such incidents have impact on their share price as it can change. Next, we can determine the benchmark for materiality. Users are concerned about company theft, misappropriation, and misuse. Total asset would be considered as the benchmark. Identify the percentage threshold for materiality. PEG recommends of 1% to 3% of total assets. Theft, misappropriation, and misuse is serious. Users are sensitive. Auditors should choose 1%. For calculating overall materiality, we take a total asset of 3 million times by selected amount for percentage threshold of 1%, which equals out to $30,000. This means that auditors will allow up to $30,000 material misstatement for the total asset. Lastly, to calculate performance materiality, percentage threshold for PM is between 60% and 75%. This was not a periodic audit, but an audit to find out if there has been theft or misappropriation. It is an unplanned incident significant enough, which was concerning for the financial statement users. Therefore, the lower spectrum of 60% should be chosen. Performance materiality is $18,000, which is taking overall materiality of $30,000 times by 60%. The auditor considers potential unidentified misstatements will not exceed overall materiality of $18,000. In summary, materiality recognizes that transactions, amounts, or certain types of errors influence the relevance and reliability of information for decision-making. Identify users and their objective before determining materiality. Determine the benchmark, what users are concerned to see. Calculate overall materiality and performance materiality. That's it for the lesson on Audit Planning Memo Materiality section. I hope you liked the video and feel free to message me if you have any questions. Always remember, taking steps to solving Audit Planning Memo is a vital part of solving audit problem. Happy studying and have a great day!